Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies that return a high yield on their invested capital. I utilize both the dollar cost average approach, consistently investing into the stocks within the portfolio on a minimum of a biweekly basis. Usually it's every week, but at a minimum when I get paid every 2 weeks. But I also do large purchases as well if I have extra funds, a bonus or something like that from work. I cover all my investments into this portfolio. I do not have a paid Patreon account, nor do I intend to ever have one. We all have enough to pay for, so it's free to see what I'm investing in every week. I do a portfolio update on Sundays. That's what you're watching here today. That's what this video is. And if you'd like to help out the channel, dropping a comment, liking the video, subscribing, hitting that notification bell helps out tremendously. Also, I have a link to my Webull account down below, so if you're looking to start your own investing account, if you use that link, you'll get some free stocks when you sign up and deposit funds into the account. I'll get some free stocks as well. It is a way you can help out the channel. You do not have to use that link. That's completely up to you. If you don't have a brokerage account, Webull is one that I use. I use an Ally Invest account. Also, that's where my portfolio, main portfolio is. I don't really cover what I invest in Webull. It's more speculative in nature. Doesn't typically pay stocks or pay dividends, I mean. So this channel, we just cover the dividend growth portfolio from my Ally Invest account. I know there's like Moomoo and some other ones as well. So if you're looking for a brokerage, plenty of them out there. I would find one that doesn't charge you any fees and that's easy for you to use. Well, let's jump into the video. As you can see here, I have made some movements within the portfolio. I've reallocated $3,495 in the portfolio, and I have added $1,318 in new funds. Usually I add about $1,300 a week. So let's jump in and see what happened in the portfolio this week. And we did get some dividends. Looks like October 26th here. Cisco Systems, ticker CSCO, out of the information technology sector, paid us $43.91 in dividends. I have the DRIP set, which means dividend reinvestment plan, for anyone who doesn't know what that stands for. And all that really means is the $43.91 paid out in dividends automatically goes back and it bought shares of Cisco Systems. So it picked up 0.97776 shares of Cisco Systems at $44.90. I always love how they throw in the extra, fractions of a penny over here, 8, like that's something. Same thing with the shares. I'm really just looking at the 0.97. So just under one full share of Cisco System with the dividends paid out on October 26th. But those were the only dividends for the week. So let's jump into the next one we'll see is the reinvestments or the reallocations. And we reallocated $3,045.27. And basically what we did there is I took a look at my portfolio. I found a couple positions. Stag is one of them. They have really not been raising the dividends. It's under 1% in dividend raises. I actually was down quite a bit on this one here, so I was hesitant to sell, but I think there were better opportunities in what I reinvested them in. That's the full $3,445.27 were the 107 shares I had of Stag, and I automatically put it right back into the portfolio, picking up 14 shares of Verizon Communications, ticker VZ, out of the communications sector. We'll pick those up for $36.19. We picked up 9 shares of Realty Income at $58.68. I know it's come up significantly from there. It's back in the 60s now. Medical Properties Trust. If you watch the channel, I covered this a couple weeks back. Someone had recommended this for me to do a video on it, and I did. And the one thing I did not like about this company at the time when I reviewed it was that they were diluting shareholders, which basically means they were issuing shares, not a ton, but enough that it made a difference. And that was the one thing I didn't like. Their free cash flow was growing nice. Everything else, profit margins looked real good. Their dividend payout is low and growing pretty rapidly. And they also have a very high dividend yield. So at 1049, I picked them up almost 11% dividend yield here. And like I said, the one thing I didn't like about them when I looked at them was that they were diluting shares. But recently, in the past week or so, they actually announced that they are going to buy back shares, which I actually really like, especially at these low prices. So they're going to buy back shares. So the dilution that they were doing, they will pull those shares back out plus some. So I like that. So I went ahead and dropped a bunch of it here, $1,000 here, and picked up 100 shares of MPW Medical Properties, and it is a REIT. It also replaced a REIT. Stag was a REIT, so we're replacing a REIT for a REIT. O Realty is a REIT. We put a lot of money into the REITs here, kind of replacing the REIT that we sold. So we picked up 100 shares there at 1049, Medical Properties Trust, ticker MPW. We picked up 12 more shares of Cisco Systems, building out. This is turning into a nice position here. Plus, we also saw that on the previous slide that Cisco Systems reinvested dividends. So not only did we get those dividends, but we picked up 12 more shares as well here, continuing to build out the Cisco Systems. Ticker CSCO, Information Technology, and we added 12 shares of Enbridge Inc., ticker ENB, at $37.90. And Enbridge is out of the energy sector. So we sold out of Stag, took those $3,045 and put them into Verizon, Realty Income, Medical Properties Trust, Cisco, and Enbridge, which I think are offering much better yields, growth opportunity than Stag Industrial was. So I liked that move there. And that all took place on, I know it says September 26th. I should have changed it. I messed up the date here. It's actually October 24th. Same thing here. September 26th, should have changed this date. It's October 25th. All this activity occurred. And the next one that I looked at and saw in the portfolio was Kinross Gold. And it wasn't a very big position, $450.10. But Kinross Gold has not been raising dividend. Plus, they have, no real dividend growth. So anytime I see a company that, and this was really just kind of throwing money in, $3, $4 stock, I'm just dropping a couple dollars, $6, $9 in whenever I have some extra money at the end of dropping money in. But I'd rather put those into Siboney-Stillwater, right? $9.22 there. So we sold out of Kinross Gold because it is not raising dividends, so it no longer fits the portfolio. It wasn't a huge position, $450.10, but we took those funds and we bought 2 shares of Union Pacific, ticker UMP. This is out of the industrial sector, which we've been wanting to build this one out. Anyway, this was on our list for the month. Union Pacific, Intel, Procter & Gamble, and Whirlpool were the 4 that we were looking to add. So we put some of this $450 into Union Pacific, most of it actually, and then we bought 2 more shares of Enterprise Product Partners, ticker EPD. This is out of the energy sector, and we added 1 share of Siboney-Stillwater, ticker SBSW, which is out of the material sector. KGC was out of the material sector too. This is a gold miner here. This is another mining company here. And we weren't done. In the portfolio, this is where we added the new capital, $1,318 in new funds. I'm really messing the dates up today. This is all this activity was on 10/28, right towards the end of the week there. And Whirlpool Corporation, we picked up 2 shares at $136.18. This is actually back up to $140 now. Procter & Gamble, we picked up 2 shares of Procter, and Whirlpool is out of the consumer discretionary sector. Procter & Gamble, we picked up 2 more shares of that one, ticker PG, out of the consumer staple sector. We picked those up for $135.38. We picked up 2 more shares of Union Pacific. So not only did we pick up 2 shares when we reinvested, we picked up 2 more in when we invested the new capital here, ticker UMP, out of the industrial sector at $197.02 per share. And we picked up 10 more shares, trying to build Intel out here as well. We picked up 10 more shares of Intel, ticker INTC, out of the information technology sector at $28.83. This has gone up even more. This is in the $29 range here. So hopefully it stays under 30 so I can continue to build this one out. But I'd probably keep adding up to about $35 there on that one. HPQ, we added 2 more shares there. HP Inc., ticker HPQ, is out of the information technology sector at $27.76. And then we had a little bit of money left there, so we added 3 shares of Vale, ticker VALE. This is out of the material sector, a mining company here. We picked up those shares at $12.63. A lot of green this week. A lot of these companies are up significantly from where I picked them up on the 28th now at the end of the week there. Even though it was only a day's difference. Like I said, Whirlpool is up in the 140s. I think Procter & Gamble is pretty close to where it was. Union Pacific is closer to 198, 199. Intel is, like I said, 29. So a lot of green this week. I'm hoping that next week things level out and actually go back down so I can pick up shares a little cheaper. But I know a lot of people are glad that things are green currently. And that was the total activity for the week. Invested $1,318 in new funds, plus the 2 previous slides that showed the funds reallocated. Now a quick look at the overall portfolio. Currently, total value sitting at $90,963.94. Dividend yield is sitting at 5.201, has gone down a little bit with the portfolio creeping up in value, even above the 1,300 that I put in it this week. Starting to get back to, I think I'm only down by 2% undervalued right now in my portfolio. If I gain that 2% back, then I'll be even on the year. Annual dividend income, this is really what it's all about. Like I said, I don't mind the red so long as my annual dividend is growing over time, that snowball getting bigger and bigger, not only from the funds that I add into the portfolio buying new shares of new stocks, but also as we saw in Cisco Systems, where the stocks within the portfolio go back in and drip and buy more shares of themselves. And like I said, this snowball continues to grow, currently at $4,731.06. Whether the market's up, down, running sideways, this grows, and that is what we're after, that passive income provided by the portfolio. Quick run through the sector allocation. In the communication sector, we're sitting at 9.27% of the portfolio. Consumer discretionary is sitting at 8%. Energy is sitting at 8 points. Well, where is energy here? Consumer, energy 8.71. Financials is sitting at 16.28%. Healthcare is sitting at 10.28%. Industrials, we're starting to see that one tick back up a little bit. It's over 1% now, 1.76%. The Union Pacific shares that we put in there has helped bring that back up a little bit. Technology is sitting at 11.1% of the portfolio. Materials is sitting at 12.78%. Utilities, we still don't have any utilities here, and REITs and real estate sitting at 14.98. So it's kind of flipped here in the last week. Financials is back again to the largest portion. REITs is the second, with materials coming behind. I still want to build out the industrial sector, and I'd like to even it out just a little bit more, maybe drop these, well, not really drop them, but add in these sectors a little bit more in the industrial sector as well to even out this overall portfolio. But that'll happen over time. I'm not as concerned with it so long as I have exposure across the different sectors. That will help me when one sector is down, another sector or two are typically up. So if you are well diversified, that typically helps you avoid the huge fluctuations in your portfolio. That's why my portfolio overall is only down 2%, where the overall market, I think it's gone back up a little bit, but was down 18, 19, 20%. All right, that is the activity from my portfolio this week. This is a picture from Saturday, out back with the dogs. Probably be out there again on Sunday morning. You'll see this video on Sunday morning. That's my dogs out back. I actually have another one you don't see in the picture, but that's Odin over there, and that is Neil. And then we have another one called Twix, who's a little Shiba Inu back there. These two are pit bull mix. He's a pit bull, and then he's a pit bull. Odin is a pit bull Rottweiler Shar-Pei mix. He has a bunch of wrinkly fur or wrinkly skin around his neck. It's pretty funny. All right, that's it for this one. I'll stop rambling and let you guys get back to it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, and subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you did in your portfolio this week. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.